Hi there, and welcome back to Legend Finance. We delve into personal finance related topics on this channel. In today's video, we will be walking through a simple strategy that everyone should follow on how to build wealth. It is amazing how easy it is to do, yet only a few people do it. Following this strategy will guarantee that you will invest your money correctly throughout your lifetime and truly get it to work for you. It's important to remind ourselves that long-term strategic investing is the way to build wealth. As Warren Buffett always says, if you don't find a way to make money while you sleep, you will work until you do. Today, we will be sharing a strategy that will do exactly that. And we will give you some real-life examples to help you imagine how you can do this in your own investment choices. Passive income means making money without doing the day-to-day work that is usually needed to make it. Here are some ways to make money through passive income. First, investing in stocks. Investing in stocks that pay dividends can generate passive income. The income is generated from the dividend payments you receive from the companies you stock in. Second, real estate. Investing in real estate can provide passive income through rental income. You can purchase a rental property and collect rent from tenants, or invest in a real estate investment trust, which is a company that owns and operates income-producing real estate. Third, peer-to-peer lending. Peer-to-peer lending is a way to earn passive income by lending money to others through online platforms. You can earn interest on the loans you make to borrowers. If you are enjoying the content we are putting out, then smash the like button. We will appreciate it. If you are new here, then welcome to our channel, and do not forget to subscribe. Without further ado, let's get into today's video. By looking at the title of this video, you will probably wondering what this optimum strategy is. This is known as the other people's money strategy. This strategy was explained in the book Rich Dad, Poor Dad by Robert Kiyosaki, a book we highly recommend to everyone who is just starting out as an investor. It is a must-read for those who want to try investing. How does this strategy work? Let's take a real-life example and imagine that you want to buy a car. The car itself is a liability. Rather than generating money over time, it takes out money out of your pocket. Owning a car is a liability for your finances. Let's say a car is worth thousands of dollars, and you are a bit of an enthusiast. You like the finer things in life, and don't we all? You have saved up for a long time, and you have finally amassed the $100,000 you have been waiting for to buy a car. Here is what most people would do. They would bite the bullet and buy that car right away. You've taken your hard-earned cash and assets and sunk them all as a rapidly depreciating liability. The second you drive that car out of the showroom, the value of that car falls below 30%. Congratulations! You are now worth $30,000 less because you like to go to places faster. Some people might say that this doesn't sound like a good strategy at all. And why would anyone do this? You are absolutely right. It isn't a great method, but this is what people do, and it doesn't help you build wealth. In fact, it massively hinders it. Most people don't try to be wealthy. They are simply content with appearing wealthy. And here on Legend Finance, we are not about that at all. Let's talk about wealth and how we build it. And here is where the optimum strategy comes in. Remember the car you wanted so much? You'll be pleased to hear that you can still have it, but you are going to need to do something first instead of buying that car directly for $100,000. Invest that capital into an income-generating asset. This can be anything from real estate shares to funds, from peer-to-peer lending to bonds. This will make your money work for you over time. And by doing this, somebody else is making money for you even when you are asleep. Passive income can be a great way to help you generate extra cash flow. whether you are running an extra budget each month or not, especially as inflation rages on throughout the economy. Passive income can help you earn more during the good times and tide you over if you suddenly become unemployed, voluntarily take time away from work, or if inflation is chipping away at your purchasing power. With passive income, you can have money coming in even if you are pursuing your primary job. If you are able to build up a solid stream of passive income, you might want to kick back a little. Either way, a passive income gives you extra security. Remember what Warren Buffett said: you are no longer trading your time to make money. As you are probably aware, you can now use the money from your income-generating asset to pay for your liabilities. In this case, the car, and let's say you want to invest $100,000 in a buy-to-lease property in order for it to cash flow well. You will probably want to take out an interest-only mortgage, but that's a discussion for another video. You've got a tenant who just moved in, and they are now paying you monthly rent for staying in your property. You can now fund the lease of your car by using the monthly income you received from the property. You have to physically pay the monthly fees of your liabilities, but you are using other people's money to do this. This is a strategy where money comes in and flows straight back out as an expense you purchased. Purchasing a car is a liability, but you are not paying for it. Your tenant is. The car will depreciate over time. You might hand it back or trade it in for an upgrade years down the line. This whole time, you have not taken a dollar out of your wallet. Instead, you are using other people's money. The best part of this process is if you decide you no longer want the car or want something more practical and possibly less expensive than your V10 with 500 horsepower. You can reduce the cost of that liability, but your assets will still generate a steady stream of income regardless of the car you have now. You are still saving money, and look at how the scenario has changed. From being $30,000 poorer the moment you drive that car out of the dealership to not having to pay for your liability after you no longer have any use for it. The asset you invested in will grow in value over time. This will give you appreciation for your invested capital since you are also making money passively while at the same time growing your net worth. This concept of buying assets to buy liabilities should transform the way you look at investing and where you spend your money. You might think, what can you do now with the money we are making from our assets? You can do anything you like. You can save for a rainy day, go on a holiday, and reinvest the money to make more passive income. This is just an example of how you can use your assets to buy liabilities. The principle itself can be applied to many things other than purchasing items. We are firm believers that investing and building wealth should not always be about cost-cutting, penny-pinching, and spending as little as possible. You should enjoy the things you want in life, and there is a way to do this. Investing in assets to buy liabilities will allow you to achieve this, and how much you yield from an investment of $100,000 depends on what you invested. Here's another example. If you went down the route of buying property as your asset, we probably wouldn't look to buy in London since the neighborhood is costly and the rental yields are low compared to other places. We probably won't get that much for that deposition. We would instead look around the big cities and their attractive yields of 7 to 8%. Investing in a startup versus 100 companies may return higher yields as well. There is much more risk associated with this. What you invest in has the risk-reward payoff based on your ability and willingness to take on the risk. Real estate is not only a great investment in general. Most tenants often pay monthly, and if you are trying to finance a liability like a car on a monthly basis, You ideally want to find a source of income that matches this payout frequency. You could still have an equity line that pays biannually to fund this. However, you'll probably find that the funds are sitting in your bank account for a long time, and you may not want them sitting there because you can get tempted to use them for something else. In any case, it's still a possibility. We probably recommend a buy-to-let property that pays a monthly equity payment. And this isn't the end of the strategy. Passive income is money you get from a business or investment that you don't have to work for. Here are some ways to generate passive income. First, rental income. Owning rental property and collecting monthly rent is a popular way to generate passive income. Second, dividend income. Investing in stocks that pay dividends can provide a steady stream of passive income. Third, royalties. If you have created an intellectual property, such as a book or a song, you can earn royalties for its use. This is more of an advanced technique, and we can only recommend it to a more experienced investor. And there you have it, the strategy of buying liabilities by investing them in assets. And don't forget to follow Legend Finance for more of these tutorials on personal finances. Leave a comment below with your learnings and insights. Don't forget to like and subscribe to our channel, and I'll see you all in the next video.